All right, welcome. This is John for an end of the month review where we stood for the markets. And a couple things. Let's take a look at the radar screen as we have the last day of the month. Really, a lot of things happened. Tuesday night, State of the Union address by President Trump. Wednesday, ADP numbers with a good, solid employment outlook. Then the Federal Reserve, of course, no one expected any rates to be adjusted, but I think the concern is that they could get more aggressive rather than doing the gradual quarter point rate hike 3 times. They could do maybe a quarter or a half a point. And I think if we see wage cost pick up, and that seems to be the case, that is what I think is spooking the market. Still a lot of chatter over the bond spreads and, of course, the knob notes over bonds and then the 2 years and the fives and looking at yield. And quite frankly, when we take a look at the bonds real quick, and I'll do that right now, we scroll right straight up here to the bond market. You will see that they actually closed positive. Here's the issue at hand, and what's probably when everyone in the world is getting all excited about bonds, and we are against a shelf of resistance and an old shelf of support. I can adjust the volume here in a second. We have not fluctuated yet below that major support line in the sand. And if I take in and expand on this on balance volume, the really main issue is we just started on the weekly basis. This last little move is just starting to eke a little bit lower, but the week's not over. It's Wednesday. So end of the month, though, bonds end up lower. And in addition, let's take a look and go up and down the radar screen and say, what new signals will be generated based on the monthly analysis? So first off, let's go up to all the way up to the radar screen and get our signals. Let's see if I can pull this up. All right, right in focus. So the first thing is, if it's blinking, it means there's going to be a change, and we did get a change. You can see TLT, and that would be this chart right here. TLT is generated a new monthly sell signal, so we'll bring that into focus for you. Here we go. There is TLT with the first new fresh monthly sell signal below an important line in the sand. That's the last conditional change. So I'm pretty certain that we'll be looking for any hopefully the key is that we get a snapback into maybe these moving averages, a snapback, because typically sometimes the markets do what's called the pump and then the dump. So we need to be on guard for further follow through, and if the market is going to roll over for the big kahuna move, we got to be willing to take short positions or look for the snapback here in the month of February. So that is a new fresh PPS sell signal on the month. So if you look at the column here, in home building, a few stocks generated a new fresh monthly. Whirlpool is a monthly high close doji. Whirlpool is there's your PPS buy, and the orange candle is color coded, signifying it is a high close doji for the month. So when we get into situations like this, it might be a good plan to maybe look for a small pullback, partial position in here, and then look for pray for a pullback there, because again, it is a monthly chart. So we might see, at the very least, an upside target. So I would hope for, since we started to balance at least bounced off of the lows here, look for a pullback and then a snapback. So that was one of a few new monthly buy signals that were generated. iRobot, the makers of Roomba, generated a new fresh monthly buy signal. So what we'd like to see when we get monthly buy signals is look for pullbacks amongst the shorter term, which would be daily, weekly. Again, in the materials sector, if it's blinking, it's brand new. So that would be Eastman Chemical. You can clearly see the monthly chart there, new breakout. Monsanto, big little buy signal for the month. Going down the list of markets, we did get Ironically, Apache, gang, check this out. Apache with a high close doji for the month. This might be an interesting play for those that are looking at it. A low risk entry in the energy space. So again, nice little double doji. This is again a monthly chart. Apache hasn't done anything. It's not probably on many people's radar. And on balance volume saw a little minor uptick. So this could be an exciting little play as we head into the month of February. So what else did we see blinking here? Again, CVX is already solid, so it's already been in a monthly buy. Noble Energy generates a buy, and Exxon breaks out and generates a buy. Moving down, Exxon's still in the double typed in there. Metropolitan Life with of course earnings were negative, so it's going to generated a low close doji last month and had follow through downside this month. The purple bar from last month signifies that it generated a sell last month, and it just confirmed that sell signal. So it could be some more downside, more pain ahead for MetLife. Going down the screen, if I just zoom down briefly, a couple other MasterCard, Capital One, and then a few in technology. You had, ironically, Facebook, which, you know, it closed up on a new high, and Facebook came out with earnings today. Not so good. They beat, but they may have overpriced their earnings. And in Google, and then another one I want to share with you would be as we get down into the social media space, which is where, I don't know, retail, social media, I don't know what to call Amazon, grocery store. But anyway, as you can see, we did get a few new buy signals, ADM, Mondelez in the staples sector. We did get consumer staples, some upticks here on a monthly chart basis. So we could see some really good gains. We have a position based on in Kellogg's, and I know people go, Kellogg's, that's Tony the Tiger, Special K, and Pringles, don't forget Pringles. We did get a monthly high close doji, a snapback, and then the market really hasn't done much all month, but nonetheless, it is in a PPS buy signal, so it's nice to see there's accumulation in that sector showing up more buy signals in the space. Coming down the list, Ford, one sell signal, consumer discretionary, which would be Ford, another Under Armour. You know, we talked about Under Armour in our own trading room, and just to let you know, if Under Armour is going to get any kind of bid, we need to get an algorithmic PPS buy signal and a close over this 14 handle, and that might launch it right back up into the top zone of the resistance. But until then, you know, it's just sitting here in no man's land, and wait for a daily close, in my opinion, above 14, or look for it to get down a little bit lower. So new monthly buy signals at the end of February, kind of interesting. Retail, I mean, not much changed. Utilities, lots of sell signals across the board. New, fresh monthly sell signals in utilities. So what does that mean? It means that they'll be under pressure. So it rallies back. Any snapback rallies would probably be a short-lived rally, and they'll be met with some selling sometime in the middle of the month. Healthcare, pretty much mixed, but you have more buy signals flashing in the drug stocks and healthcare sector. McKesson, for example, one stock that we're trying to buy on a pullback would be Teva Pharmaceuticals, and I mean, we're trying to buy a big pullback, but it did generate a monthly buy signal, so look for maybe some upward pressure there in Teva, the maker of generic drugs. So what else do we get? Biotech, a few new fresh buy signals here with Gilead. We had Vertex Pharmaceutical. These were big breakouts, so you're going to have to look for a pullback, but the longer-term trend is up, and it's showing and flashing all of these as new fresh buy signals. One here is AMZN, a new monthly high close doji buy signal. So maybe we get a pullback into the low 180s, upper 170s, and look for some a daily buy with that dominant monthly trend. In other words, if the monthly trend is up and it generated a new buy signal, right? Monthly trend is up and it's got this new breakout buy signal, then look for the dailies to come down a little bit, and then when the daily generates a buy signal, go with it. You'd be going with a short-term buy signal in a higher degree time frame buy mode. Okay, so all of the other sectors, transports, nothing new here, nothing upset the apple cart. Property REITs, casinos, of course, you got breakout with Caesars. Remember, they filed bankruptcy and they're coming back a little bit. And again, MGM, Las Vegas Sands, MGM's already been in a buy signal. Big move up for the casinos this month, except for Wynn, which, of course, we all know what happened there. But it did have a heck of a move to the upside and pulled back to its moving averages, which are trending higher. So it hasn't rolled over to the downside or generated a sell signal. But boy, if you ever wanted to see a definition of a long-legged doji, there it is. Long-legged doji for Steve Wynn or Wynn Resort Properties. We did get already had a buy signal in Twitter, and even in our weekly thoughts and observations. We've played that a few times, or played it in an option strategy once, and then tried to buy the pullback here. Apart from that, as we go down, and I'll scroll for the rest of the analysis here, earnings today, or at least coming into some of the earnings, which was fairly interesting considering the fact, if we get to Facebook, here it is, I got it in twice. Facebook, in the after hours, we'll see how it really behaves in the overnight session, because as we all know, it is taking a kind of a beating. Net change right now is down. That's right, you guessed it. That's not a misprint. That's down $9 or 4%. So Facebook, big miss to the downside. Tomorrow we were looking at a couple stocks. One, eBay. We did at least recommended a diagonal calendar, selling the weeklies, the 44s, while buying the Feb 42s, and reducing our cost basis, because implied volatility was just off the charts there. And that might work out to our advantage, because there's no way this stock looks like it's going to 44 overnight, or at least not at this point in time. So that was one that we put out. And then Amazon. I want to talk about Amazon because it comes out tomorrow. Amazon, it's pretty freaky. Our volatility, or our algo system, has a pretty decent model on Amazon. Now, this is and I'll share with you here. The performance strategy, equity strategy, has been doing pretty good. It's not one of the it's Amazon. I mean, Amazon kind of goes up, moves sideways. We get a couple bad trades like that short. It gets out, and it gets long. Was long, got out, got long, got out of the long today, and actually reversed short on a low close doji. It's ahead the trade a couple bucks, about $6. When we take a look at the overall graph over the last year, pretty good equity curve. It's just, gone ballistically straight up, and it's not just a long only as you saw it, so it trades back and forth. So not a bad performance for the equity curve. So it's interesting to see if Facebook's a precursor to what could happen. We have a gap in the market. There's several gaps down here. We were thinking possibly this gap could have been a measuring gap, exhaustion gap. There's a breakaway gap way below. Is it due for, or is it ripe for a pullback? Considering the fact that this system could cover this short position tomorrow on a lower open, it could reverse. I just thought it would be interesting to share with you that after this huge rally, we got a low close doji, and the system actually did short, as you can see, short the market. So that's headed into earnings. The VXX program has had a pretty stellar return, but over its history, and quite frankly, in the last few weeks, we've gotten some nice trades off the VXX, both the short side here, a couple losers, and then the long side, and then got long, and then went short and covered that short position. So it's interesting that the VXX is, and I know a lot of people were talking about, while we saw new highs in equities, we did not get new lows in volatility. And as the equity market today started to do what? Sell off, we didn't get a new high in the volatility. So there seems to be a little disconnect between the markets overall action and volatility. As we take a look at the mini Dow, we said it was too good to be true. It was just an incredible run for the month on the 5-minute mini Dow contract. I mean, it's given some great trades. And again, this little trade right here, right after the Fed announcement, it did not get short because it was outside of the parameters. It did go long. It's currently long 2 positions right now, so it has an open trade equity, which puts us for the month. And this will probably max out or get out in just a little bit. But here's the overall performance. And again, a little too good to be true as on trading 2 lots, this thing for the month. And again, this is the month performance. And if we take a look at periodic returns, we started off trading on the 3rd. Not every day was a winner, but boy, when we picked up nice trades overnight, it was pretty decent trading. So overall, just a phenomenal month for this product and how it trades. And I mean, I can't say that. I mean, it would be nice to trade 2 lots with a full margin requirement on the mini Dow and get that type of return. I would say after a full quarter, 3 to 4 months, that's when you would increase your lot size or double your lot size if you can, take an account for and provide that kind of profit on a monthly basis. Then you would increase your lot size over time and press or increase the position size to get the maximum return. But in this environment, you got to realize we've come from an ATR, an average true range of 120, less than 200 points to over 300 points all of a sudden. So maintaining a system, optimizing it for both the daily trading range concept, its risk-reward ratio, before we start fidgeting around with doubling up and pressing our bets, so to speak, or increasing position size. We want to have a series of solid months behind us, and that's something I would always recommend, and most traders would probably agree to that. I mean, some people want to press their bets immediately, and I like to see, how that period of volatility instead of a 1-month wonder, and then all of a sudden, boom, February, we come in and crash and burn, and nothing happens, nothing moves. So that's where we stand there. Apart from that, everyone, it's been a great month. I hope you enjoyed at least what we've been putting out as far as the volatility, and I just thought it'd be nice to maybe wrap it up one more time with what's happening with how we ended the month, at least looking at in terms of the breadth of the market and volume studies, because we still see the potential for, if a market is going to break down and really break down, right? I mean, the big kahuna that a lot of us would love to see. I mean, love to be loaded up on puts and watch the market just crash and burn, right? I think that first and foremost, we're going to have to get moving averages to roll over. We're going to need to see a little bit more weakness relative to its breadth of the market, the advanced decline, before we start to see that. So we'll keep you posted and trade on. And as far as the person Algo Optimizer, if you're interested in more details about how this works, or if you're interested in our package here with the person's analytic studies, the advanced trading system, simply give us a shout out here at personsplanet.com. And here's how you can find us on the specific website link. Just simply go to the main page at personsplanet.com, and as you see Persons Indicators, just go to Algo Optimizer, and you can read through, and you'll get all the information you need in regards to the Person Algo Optimizer. So with that said, again, what this product is meant to do is to give us, and one of the things which is really kind of cool, is that we're coming up with a newer function and feature on our Algo, the 15 version. And what this will do is this will give you the opportunity, which is really, really incredible, to say, hey, sometimes do we just take any sell signal, or do we take a sell signal confirmed with a breakout below a specific support, which we call a last conditional change, which are these white lines in the sand? Or do we optimize it for best trading strategies? So sometimes you can see this is one version here, and again, we'll look at the format, the strategy, and you can see it says Person Algo 15, and then the next one down below is, you can see format strategy, and it's just the original Person's Algo. So clients have an option and will be able to get an opportunity to use both the older version and the newer version, which gives a function to optimize whether or not you want to wait for a buy signal, a confirmation of a buy signal above or below a support or resistance based on the last conditional change concept. So, are there any major differences? Well, let's take a look. The new version has and we're looking at this from the middle of November going back to the whole month of January. This is just gold. It's not a huge thing, but when we take a look at the performance graph, you go, oh, that's kind of, a significant drawdown. Its performance summary, 576 on the profit factor on longs. That is sick. It's crazy, right? 77% accurate. Shorts didn't do too well, so that's why we, and again, total number of trades, 17. So many people would prefer to have less trades and have an accuracy of a 5.76 profit factor. Now again, this is only 17 trades and this is the month. Now let's take a look at the version, the original version, which has a little bit different trade graphs. Its efficiency is much higher, and of course its performance equity curve for the month is pretty decent. Difference is 51 trades. It trades a lot. The profit factor goes down, but the profitability increases. So you have more trades, more times in the market, 51 times. Some people like that. They want more action out of the trade. They want to be in and out, in and out. And so the difference is to be able to filter out which trades you want to take and which trades you don't want to trade, right? By optimizing, and that I think is the key element. If you notice something really neat here, and I'll try to bring this into focus so it kind of compares an apple to an apple. So here we have the same type of setup. It actually, you can see, takes along, and in here it just doesn't take along till over here. It gets short. So this has a better profitability and it has less trading. This obviously has a lot more trades to it. So, it depends on your appetite for risk. It depends on an individual's appetite, whether they want to trade it with higher confirmation or better confirmation of signals. That's what the Algo Optimizer does. And again, it's got built-in targets, built-in stops. It has built-in trailing stop function, and of course, it just will get you out based either on a trailing stop feature or a max time frame basis. So that's what's coming out. And again, people can use both the old version and the newer version, and any updates that we put out, of course, are free of charge for clients that do get the license. And the license is for lifetime. It's not you rent this. It's a one-time fee. But needless to say, go to the website. You can read more about it. It's one of the most incredible products for an algo system that allows end users to maintain their trading systems based on changes in periods of volatility. Thank you all very much, and I hope you enjoyed this end-of-month wrap-up and also what new signals were generated off of our monthly scans. Until next time, thank you, everyone.